Last day of the week, we've got October 18th. A move, chop, but let's drill down in on something. Two of my worst trades this week. I think I did a highlight earlier in the week on the first one, and I replicated the second one. And if we just look, first of all, most people will not learn to read charts from a congestion box, meaning that you could look and your eyes should fixate on where it congests and then maybe breaks out. Little congestion over there, tiny one in there, congestion in there, here, everywhere. So the thing is there was something I look and I like to really could read where people are getting pushed off the boat. When longs exit, and I'll work this up, when longs get pushed off the boat and there's less of them, that also equals less sellers, right? If there's less longs, less sellers. If there's less shorts, all right, and there's shorts in here and there's less of them, what does that mean? There's less buyers, right? So if there's less buyers, chances are you could go down. And that's important to notice. However, it's really also important to know where you're at on the map when you're playing this and you're trying to read this. Earlier this week, and I think if you looked at one of the earlier videos on the YouTube channel, you'd find that I talked about the same thing. This market had this box, which is well defined, okay, at this point, before you see this big up bar right there. So if we take this chart and we scroll it back to all we know, and this is the all you know moment, you can't see that this box is defined down here, right? And in any box, you could accurately assume there's always open shorts and open long positions. When you start to leave the box to the upside, oftentimes you have shorts chasing, trying to buy it to puke a position they're getting squeezed on. If you start to leak to the downside, you start squeezing longs, right? And they're starting to see their position either getting worse to extend their losses or see their profits diminish. Either way, when markets go down and leave congestion, longs are nervous and more nervous and pissed. When you start to go up, you get shorts over. So when you get this pop, you got to be careful selling near above the top of it, because you could also get this, you could often get this follow through. So it's a good way to disqualify, even if you see something. Let's bring this up. Even if you see something in here that wants to get you short and you think, oh, it could be a head fake to run back down, let it start to show you it's a head fake, because you're otherwise getting in front of a train. Get on the train from the platform, not from the railroad tracks. Because even if it's a slow moving train, if it doesn't stop, it's going to run you over. And so I knew I was on the train tracks and still took it and didn't do terrible. I didn't puke it all the way here at the top. But I got ran over a little bit and had to get out. It hesitated and then goes. But I should have been able to say, hey, you know what? This market is leaving this box and it could have a probability of starting to extend and really go. So you're going to take losing trades. You're going to take trades sometimes even outside your strategy. What's a travesty is if you don't identify it pretty close to real time. And when you think you're making trades that are exactly what you want to make and they're not, you'll blame a strategy that shouldn't get blamed. And innocent strategies go to jail. So you got to stay on top on what you're doing and expect to do things wrong, expect to make mistakes, expect to miss good trades, but you got to document it in as close to real time as possible, or you'll be on the wrong path thinking it's the right path, or the right path thinking it's the wrong path. Very dangerous. Have a really nice weekend, guys. See you Monday.